Okay, no idea how long this is going to take. This is Monday, March 3rd. Going to go forward until April 3rd. This is crude oil. It's a 1 hour chart, and I'm doing this exercise uh, in response to and in support of a post Blue Steel made in the Price Bob thread. Um, Gosh, I don't know if he made it today or if this was yesterday, but basically he said, hey, stop doing more, start doing less, better. Master one setup, execute it with as little emotion as you possibly can, review your trades, repeat for a month, repeat for 3 months. And this is basically uh, the psychological and emotional underpinnings of the Price Bob thread. Identify a setup, preferably based on a fixed time bar interval. Create some rules as to how you'll enter as price moves away from that reference bar, and just do it over and over and over again. And the idea is that this becomes a very mechanical trading method. It takes all discretion out of the picture. And by removing our discretion, we remove ourselves. We remove our ego. The outcome of the trade doesn't matter because it has nothing to do with us. It is purely the market and what the market does. So I'm going to run through this pretty quickly. I'm not going to, I don't, maybe I will. Let me see. Maybe I will sort of keep a little running tally here just for fun. Let's see, grab my pen, hold on. All right. So I'm like right here in my office, my home office, sitting here at my desk. It's just, so here's what the trading rules are going to be. So highlighted on each day is the candle that opens at 8 a.m. Eastern, closes at 9 a.m. Eastern. For crude oil, 9 a.m. had been the pit session open. So 20 years ago, when they would show the oil pits on CNBC, they would go into a frenzy at 9 a.m. when they opened. That was when the pit session would open. So we're going to use that. We're going to treat this as a MeBob bar. We're going to treat it as a breakout method, however. So we're not going to wait for a bar to close outside of the range. We're going to put either a buy stop or either a buy stop above or a sell stop below. We're not going to do both. What we're going to do is we're going to place the trade in the direction of the close of the 9 a.m. bar. So on this day, for example, we would put a sell stop below the low because it's a bear bar. This hourly bar closed below the price at which it opened. And we're going to do a 1R risk and a 2R profit. We fix it so we can snap this to the exact price. So, for example, on a day like this is March 3rd. So here's how we'll do it. We're going to do a 1R risk, 2R profit. When price reaches 1R, we're going to reduce our risk to 1/2 R. Okay? Hopefully that was easy enough for you to understand. Again, 2R profit target. If price reaches 1R, we're going to reduce our risk to 1/2 R. Okay, So on this particular trade, reached a 2-hour target. Profit was $680. Let's go to the next day. Get rid of this. Grab my. So we have a bull close. We're going to buy the breakout. Obviously a 1-hour loss. Going to lose $550. Alright, so what the heck? There we go. Let me grab my calculator. I'll keep it on another screen. So you had 680. We're going to minus. Of course, we're not taking into account slippage, commissions, fees. This is just really just an exercise in how you would back test something, not even to determine if it has an edge so much as just to sort of practice doing it, because the idea is you want to do something like this. Okay, today and this is the reason I wanted to do we're just going to go in the direction of the candle. It makes it much easier and much quicker. So this one reached a 2-hour target. So that's plus $1,120. There is a micro contract for crude as well, so you could always trade 1/10 the size. And as always, this is not a recommendation to do this. You can win more money or lose more money than you invest, blah, blah, blah. This is all for, this is social media fun for Forex Factory. So we're going to add 1,120 to the calculator. All right. So just to keep a running tally so I don't have to do it all at the end. So that was 3.5. Let's go to the 3.6. Get rid of this. Grab this. Okay. We're going to sell the breakout. Go for 2R. Whoops. Okay, we did not make 2R. We did make 1R. Oh, and we're going to close at the close. So you got to close by 4 o'clock. So the close here was 65.95. 65.95. Entry would have been 66.12. Oh, let me just grab a calculator here for these things. So. Another thing you could do, again, this is just for the sake of this exercise. I'm going to run it until 4 o'clock. You could, we reach 1R, reduce the stop to half an R. You could always also trail then, put a buy stop here, however you want. But you got to have rules, and the rule for this is going to be close it at 4 o'clock. All right, so again, so our entry was 66.12. And we took the close of the trade. That's $65.96. That's $170. Okay, so 170. Get rid of this. Grab this. Go to Friday. We're going to look for a sell stop. Boom. So took a $400 loss on Friday. Minus 400. So minus 400 on my running tally. All right. Grab the tool. Let's go to Monday. No trade. We would have had a buy stop above. Never got filled. What's that date? 310. Okay, so that's scratch, nothing there. Let's go to the next. Okay, we're going to do a sell below. This is an unfortunate day because it would have been stopped in here, stopped out there, lost 350 on the 11th. Okay, minus 350. Again, the point of doing this type of an exercise in real life, whether it's a sim account or a live account, is just to become a mechanical trader. you're not worried. You're not responsible for the outcome, right? Okay, so this is one. Our close was at 67.43, so 67.43. Our entry would have been 67.08. Okay, so that's would have been a plus $350 day on the 12th. We're looking for a sell. Okay. Oops. So this probably would have been a half-hour loss. Made it down here to 1R, and we would have, if I were actually trading this method, I would have not moved my stop to 1R, one half R until this bar had closed, but I didn't say that before at the beginning, so we're going to call that a loss. 303 on the 13th, we lost $145. In other words, I would have maintained this stop until this bar closed. But that might not be the best way to go. Probably better just to do it the way I just did it. We hit 1R, just move your stop to a half R. That's what we're doing it for anyway, to reduce risk. Grab the tool. Let's go to Friday, no trade, because I don't think it. So this is something interesting to talk about. So it would have stopped you in at 2 o'clock in the afternoon. I wouldn't do that. Especially my criteria would be, I want to be stopped in on probably the next hour, unless it's an inside bar. Then maybe the second hour. But the other thing to look at here is had you gone short, you would have gotten close to the 2R target. Yeah, I wouldn't mess with it. If you don't get filled by the second bar long, I wouldn't take it. So that's another day without a trade. All right. And did I do something here? Yeah, I didn't add these up, so let me add that 350, and then let me subtract that 145. Okay, now we're going to go to 317, I believe. Should be Monday 17th. We're going short. Got ourselves a 2R target, and that was $320. Let's add 320, and then let's go to the next day. We got another red bar. We're going to go short. Short was triggered. Whoops. Okay, to our target on the 18th. That's $600. Okay, now let's get rid of this. Grab this. Green, we're going to go long. To our target, 480 on the 19th. Let's add that here. And again, not accounting for commissions, fees, or slippage. We can, at the end, we'll make like a 10% adjustment. In other words, we'll subtract 10% from the final profit or loss. All right, short trade here, did not make it to 1R. Going to take a full loss on the 20th. It's going to be a minus $310. Okay, and then we got to go to the 21st. Grab this. Okay, buy. We did not get to 1R. We're going to close at 4 o'clock. So we bought at 68.10, and we're going to cover at 68.22. That's 12 ticks. $10 a tick, $120. to the good. Let me add that in here. And again, we'll get rid of this. And we'll go and grab the tool again. We're going for a short. I'm going to lose $420 on, that's the 24th, right? Yep. Minus 420, minus 420 over here. Go forward, this is a buy, another loss. Would have gone long, would have lost $190. So I got to dump that over here on our running tally. Alright, go to the next one. That would have been a short, never triggered. And again, if it's not filled on this candle, well, first, if this candle closes outside of the range, I'd cancel the order. The only reason you would continue with this, with an entry order, is if this had been an inside bar, or if it had closed back inside this range. So, no trade on the 26th. 27 was a long, obviously would have been presumably a loss. I'd have to be certain, well, it was a loss. This closed here, it opened up here. So it triggered, went up, came down, lost $240 on the 27th. So let's subtract 240 here. And get rid of this. No trade on the 28th. And it's no trade because we would have done long. I'll do a video tomorrow where I'll bracket it. But for tonight, we're just doing it the rules I said. Alright, that was, so now we're going to do Monday the 31st. Alright, 331. It's a long trade. There's $840 to our profit. Alright, let's get rid of that tool there, grab it again. We're almost done. We're going to just do this whole week. Okay, this would have gotten to just before that 2R target, so we have to call it a half R loss. So that's 4-1. Minus, what was the half R there? Minus 140. Okay, no trade because it would have been a short. 142. So no trade, no change. Would have had a short here. And another thing, I'll give some thoughts at the end. All right, so this would have been a, oh, let's see, holy moly, that's a huge range. Oh. Well, look at that. We would have gotten stopped in here, and it didn't get to 1R, so it got to a 2R target. Look at that. So there's a $2,100 on the 3rd, plus $2,100, which is going to actually be more than our accumulated profit up to this point. But that's trading. Could very easily have been a loss and wiped out everything. See, so this is today would be a long trade. This triggered here. I'm not taking it. Like, I maybe would have kept the order here after this bar, but once this happened, even though it closed back up here, nah, I'm done. So we got no trade on Friday the 4th. Fourth no trade. So here's what we got. After 1 month of trading, you'd have been up 4,035. That's minus 10% for slippage, commission, and fees. So just following those simple rules, not really stressing too much, because if you have the rules, you shouldn't be sitting there going, oh, what should I do? Should I move my stop early? You gotta have the rules that keep the stop loss where it's supposed to be. Some other thoughts for this are, of course, bracketing. Be interesting. Oh, did I just close that? I should have noted that. Oh, I have it recorded. I'll be able to check it out. Anyway, so yeah, I think tomorrow night I'll do the same instrument, same basic method. I want to go back to Monday, March 3rd, and I'll bracket it, buy stop above and stop and reverse if it triggers the other way. Buy stop above, stop and reverse to short. What's going to end up happening is you're going to have days like this where you're going to lose both directions probably. Not sure it'll make up, but we'll see. Let's do it tomorrow. Took about 20 minutes to do this. Probably take a little longer to do that one. But you can do it yourself. But these are the type of things I'm looking at. This is how I want to trade. From back in November when I had my roulette epiphany, I was trading an NQ 15-minute chart. I had a couple of different 15-minute bars where I was trading to break out of those bars. And it's to this day, it's actually still profitable. It's just that the range on the NQ is nuts for me. When I was trading it on a 15-minute chart, my stop loss was 12.5 NQ points, and my profit target was 25. You can't do that now. You couldn't do that all the way back in December. Volatility had increased sufficiently that a 12.5 point stop loss wasn't working. It took away the edge. You need to be able to base this type of method on something that will adjust for volatility. And that's why myself and Blue Steel have gravitated toward using the measured move of our setup bar, because that in and of itself corrects for volatility. It self-adjusts your money management to the current volatility. But that's it. So some really good discussions going on in the thread. I encourage this way of thinking and talking about it. I'm very much in agreement with Blue Steel. And this is really right out of Mark Douglas. Some folks who read Mark Douglas maybe don't quite comprehend everything about him. This is straight out of Trading in the Zone. It's the first stage of becoming a consistently profitable trader, and that is becoming a mechanical trader. You can go and read the book yourself. Don't take my word for it. Go ahead and read Trading in the Zone. It's also in his first book, The Disciplined Trader, and it's come up with a mechanical rule set that takes your ego out of it. Ego is it's death. It's death for a trader. The market has got to humble you. If it hasn't humbled you, you're probably not ready. You're probably not ready. But this is straight up Mark Douglas. Simple mechanical method. Take your decision making out of it. So there's no decision to be made. That's what I like about the way I set it up for tonight. Which direction should I trade? You're going to trade in the direction of the 9 o'clock candle close. Bull candle, go long only. Bear candle, go short only. I think the money management could be better. I think 1 R target. At 1 R, move your stop loss to half R. And then once you get to 1.5 R, I'd probably move my stop to plus 1/2 R. But maybe we'll do that one tomorrow instead and then do the bracket another time. But that's it. Hey, but you can do these for yourself. This isn't some special skill that VidVad has. It's not some special, secret society that Blue Steel and I belong to, and only if you're an initiate will you be able to do this. Anyone watching this video can do this. There are certain times of day that lend themselves to fixed bar methods. They're going to typically be the first hour of one of the sessions, whether that's the Asian session, the European session, or the New York session. If you're trading a stock index, then the 9:30 open, somewhere either right before, right after that. 8:30 when the big news comes out. I actually have a friend who also is pursuing this sort of method like I am, and he trades either bonds or 10-year notes. I don't know which one he's doing, but he uses a 20-minute chart, and he uses the old, the pit session I think was 8:20 open on bonds, and so he does a 20-minute opening range because that allows that 8:30 news reaction to take place on those days, and then he works it. I don't know his rules. I could see if he'd share them with me, and if you wouldn't mind me sharing them here, I'd be happy to make a video on that. But anyway, that's all you have to do. It doesn't have to be crude. You can trade anything you want. If you have access to a futures market or a stock exchange, trade a listed security. If you can get away from the CFDs, the Forex, all those bucket shops, if you can get away from them and trade an instrument that's liquid and regulated, where the counterparty is other market participants, not your broker's computer, which is programmed never to lose and make you always lose. You can trade anything. So anyway, I just wanted to respond to and support what Blue Steel was saying. Sometimes, when you hear it from one person, you may think it sounds good, maybe it doesn't sound good to you. So I just wanted to say I'm in full agreement with what he's posting. And it's really the heart of this thread, the Pricebob method. So I know, for example, and I get his point. One of our good friends posting in our thread, Batavia trade, he questioned whether or not this discussion maybe doesn't belong in Trader Lounge or Trader Discussion, and I totally get why he would say that, but I would say no. I encourage this type of discussion here because the basis of doing a Pricebob method, and Pricebob is sort of like the big, like an umbrella, right? MeBob it encompasses MeBob, opening range breaks, any other fixed bar methodology. I don't know if it was the right name for it or not, but in deference to Robert Falk and his MeBob method, I threw Bob in there. I felt like I didn't want to be locked into just his method. I wanted to give some deference to price action itself. So Pricebob. But the reason I was ever drawn to these Pricebob methods is, again, I call it my roulette epiphany, back in November of 2024, and I was immediately, it was like just a flash of intuition that some sort of fixed bar and reversal bar. And I'll get into reversal bars later. We're not even there yet in the thread. They're not complicated, but I don't want to complicate things any more than they are. But that's the basis of pursuing these explorations. We're looking for mechanical trading strategies. Actually, this is the strategy. We're looking for specific plans that might fit me, might fit you. Every one of us might be a little different. Some people want to trade the YM. Others want to remain in the currency area, so they might want to trade currency futures. Bonds, stock indices, foreign indices, the DAX, the FTSE. You could trade anything. The only thing I want to dictate to the thread is that we eliminate the squiggly line indicators as a means of determining trade entries and management. But that's it. Okay, talk long enough. Have a good night.